Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The White House, of course, releasing a statement, the title which reads as follows: Clarification of exemptions under Executive Order 14257 of April 2nd, 2025, as amended. The word exemptions is in there, but President Trump says it's fake news to describe this as exemptions or exceptions to his tariffs, because tariffs on these goods, things like iPhones, other consumer electronics, are still coming, just in a different bucket, as he calls it, semiconductor tariffs, which he says are on the way in the not-so-distant future, in addition to other tariffs he just talked about in the Oval Office as well. So on that note, we go to Bloomberg's Tyler Kendall, who is live at the White House with what we are understanding at this point from the administration when it comes to tariffs. It's not just chip tariffs, Tyler, that are on the way. The president's looking at pharma, too.
Yeah, hey, Kailey. Some big headlines, particularly when it comes to those sector-specific tariffs in just the last 30 minutes or so out of the Oval Office. As you mentioned, President Trump doubling down on the idea that pharmaceutical tariffs could be coming soon. Not necessarily surprising. He's really been talking about this. But we should note the timing is also interesting because the Italian Prime Minister, Giorgia Meloni, will be here at the White House later this week. We know that the European Union in particular is bracing to get hit hard when it comes to those pharmaceutical tariffs. Then he also made some news about some other sector-specific tariffs, saying that he might be interested in granting a reprieve when it comes to automakers who are moving production from Mexico and Canada in a bid to give them a little bit more time when it comes to reshoring. So some big headlines there about how this White House is looking at the timeline and whether or not we could actually see a longer lasting reprieve. The other industry, of course, that is getting at least a fleeting reprieve for now are those tech imports that you mentioned, while we wait for potentially a Section 232 investigation to get underway so that those chip products can be tariffed instead under sector-specific tariffs instead of the broader so-called reciprocal tariff plan. But when asked on Air Force One last night about if he was willing to grant any exemptions to certain products, here's what President Trump had to say.
Well, that's going to be announced very soon, and we'll be discussing it. But we'll also talk to companies. You know, you have to show a certain flexibility. Nobody should be so rigid. You have to have a certain flexibility. And we're doing really well, and financially our country is going to be stronger than it's ever been.
So some products there's flexibility for some products?
For some products, yeah, maybe.
Of course, the big question is just how flexible will this White House be? In the past, when they've imposed Section 232 tariffs, they've been at a 25% rate. President Trump declined to comment on what the rate will be when it comes to these chip-specific products. But we also have to keep in mind how sector-specific tariffs are designed to be stacked on top of existing levies. And Kailey, President Trump made clear that all of these tech imports are still subject to that baseline 20% tariff that was levied against Beijing back in February.
Yep, over fentanyl. Bloomberg's Tyler Kendall live at the White House. Thank you so much. And on that flexibility point that Tyler was just making, we heard that reiterated by President Trump in the Oval Office earlier today, in which he also noted that he's been talking to the CEO of Apple, Tim Cook, and that he doesn't want to hurt anybody. Apple shares right now well off the highs of the session, though still up about 2.6%. And it's on that note we turn to Ed Ludlow, co-host of Bloomberg Technology. So, Ed, when we consider that obviously Apple was stuck in a very difficult place with the tariffs that were put into place, especially if the China tariffs applied to them, how much can they take advantage of this reprieve if the reprieve is only temporary?
Yeah, I think the technology sector, it kind of accepts that there will be a bucket-specific tariff. Right. And the biggest outstanding questions are on timeline, because you have the written communication from the White House, which you quite rightly point out literally uses the word exemption, and then take in aggregate the commentary of Trump's cabinet members on weekend television. But something specific at the semiconductor level also branches out to the rest of the electronics industry, right? Because smartphones, laptops all have chips in them. You need to understand what that's going to be. And you know better than I, the biggest kind of unknown here is a Section 232 32 investigation, which looks at the impact of tariff policy on national security. Essentially, it's a tool that's been used in the steel industry, for example. But looking at history, those investigations take the better part of a year. So, answering your question on Apple, clearly their strategy has been to shift priority of iPhones built outside of China, largely in India, and move them to the US. But it's just a temporary measure. The other question, and the one that probably NVIDIA is the better case study of, is what is the end goal of the president's policy? Is it to generate revenue for the country? No, it's probably to onshore manufacturing in America, which is a whole other question.
Well, and the president was talking about that earlier in the Oval, touting the announcement today of how NVIDIA is using its pledged hundreds of billions of dollars in investment in the U.S. This is what the president said, Ed.
NVIDIA, it's one of the great companies of the world, modern, super modern companies, controls segments that nobody, sort of controls the world in a sense, and they're coming in here in the biggest way with hundreds of billions of dollars. Not like millions of dollars, hundreds of billions of dollars, and I'm honored by it. And I want to thank Jensen and all of the people that we deal with.
My question, Ed, is it's one thing to make the pledge of investment. It's another for that investment to actually be realized and result in capacity in the United States. How long is this going to take, not just for NVIDIA, but any tech company who wants to do this?
Well, according to NVIDIA's announcement this morning, 4 years to develop US manufacturing capacity for their server designs that go into data centers, power AI training. There's an element of fact check here. Yes, the president is right that NVIDIA essentially has a monopoly on the market for AI accelerators, the chips that train models. He is sort of incorrect to say that it is an investment of hundreds of billions of dollars. What NVIDIA is saying is that they are moving to establish manufacturing in the States that will produce hundreds of billions of dollars value of goods. That is the cost of doing business here in America. But I think most people I speak to in the technology industry directly involved and related to NVIDIA, investors, this is the result of tariff policy. Because think about NVIDIA, right? If you make your high-performance systems here in America, they probably cost 20 to 25% more. The cost of doing business here is greater. But then there's a tariff on doing business elsewhere, probably in the long run. And so net, if you're NVIDIA or you're one of NVIDIA's customers, you have to choose what is the best place for us to do business here. And clearly, reading the statement from Jensen Huang, he talks about supply chain resilience and talks about making the business more robust. This is a response to the political actions of this administration.
All right, Ed Ludlow in San Francisco, thank you so much. Co-host, of course, of Bloomberg Technology. Much appreciated. This, of course, is Bloomberg's Balance of Power as we consider the intersection of these tariff policies, how they're filtering into the decision-making of companies like NVIDIA, and ultimately how all of that feeds back into financial markets, which have seen, at least in the equity market, the relief rally fading as we've moved through this Monday trading session. And we want to talk more about the outlook now and turn to Katrina Dudley, who is live in our studios at global headquarters in New York. She's Global Equity Portfolio Manager at Franklin Templeton Investments, joining me here on Bloomberg TV and radio. Katrina, it's been a while. Obviously, it has been a month, a week, a year that has been absolutely wild when we're contending with tariff policy. I wonder what you make of this conversation around technology-oriented exemptions, specifically the idea that there is a bit of a reprieve here, that the president suggests he will have some flexibility in carving out certain goods from these tariffs. Do you see all of that as good news, or is there still enough bad news in terms of the baseline tariff rate that is still in place, the tariffs on China that will remain with no real progress seen toward a deal? Is all of that still enough to be dragging on risk appetite?
I think, look, when we look at tariffs and the conversation, the key, as you're talking about, is flexibility, that the president is willing to listen. He's watching the market, he's watching the reaction, and he's listening to CEOs, and he's listening to what they're telling him. And in this case, we've got some CEOs are reacting in terms of, we are going to make investments in America. And that, from a perspective of an American, is really good from us from a resiliency perspective, as well as that reshoring of jobs and helping that middle class. And then you've got on the other side the fact that these factories don't just get built overnight. And I think that there is a need to phase in some of these tariffs and phase in those measures, which I think he's going to do through that exemption mechanism.
Well, I guess there's a question of what happens in the interim when we're actually considering the health of these corporations and their financial picture. Knowing we're now in the heart of earnings season, I wonder, Katrina, how you expect the uncertainties around this policy that remain, the difference in the short and the long-term outlook, to manifest themselves in what we're hearing, not just about the results looking backward, but what kind of guidance companies are really able to provide going forward.
Look, the impact has been felt actually more in the small and the mid-cap sector. If you look at our large cap companies, they've got much more resilience in terms of the balance sheet, their ability to flex their manufacturing. So it's actually going to be in that lower end of the market that you need to focus on the comments that are coming out of them. That's the first side. The second thing is that we've got these initial announcements, but then we've had reversal of some of these announcements. We've had adjustments and everything. So I think that the commentary coming out of earnings season is going to be, we actually had a great quarter. Spending held up, and so the numbers for the backward-looking quarter are going to be okay. It's just going to be that uncertainty that relates to the forward outlook, and I think that CEOs who talk about the variables and talk about what they're looking at and what is causing that variability will be rewarded by the market.
Well, and which would you be more concerned about when we consider the different variables in the forward picture? The idea that it's not clear what the tariff rates will be, so therefore what kind of margin compression companies might be dealing with, or the idea that it's not clear what economic impact the tariffs will have in how much demand there will still be that these corporations get to be on the receiving end of? Which would you say is the greater risk here, or are they just too entwined, Katrina?
They're actually both risks to the market. The first of all, in terms of the amount of tariffs, the question is how much of that gets passed on to the consumer. The second part of this is how much of the consumer is actually doing forward buying or has been doing forward buying, like buying 2 or 3 Apple iPhones ahead of the announcements. So you could have some unevenness in terms of demand patterns, and that's something that we're watching. But if that margin pressure, if you look at corporate margins, they're at very, very strong and high levels. So I think that there's some ability of them to absorb some of those tariffs in their own margins. And that doesn't worry us because we think that companies are well positioned.
Well, and I wonder what companies you see as best positioned here, Katrina. Is it staples really that are the safest haven right now? Where else would you be recommending you seek a harbor in what has been a pretty incredible storm?
But when you talk about a staple, those staple companies are still subject to goods that have got tariffs on them. We don't make all of our produce here in America, and so they're subject to the same characteristics as before. So I think it's actually very unusual because there's so many different factors that people have got to look at that are influencing this market that haven't influenced it before. We talk about the partisanship that's really impacting the ability to trust any type of forward-looking sentiment index because you've got that dichotomy between the Republicans and the Democrats, as well as the fact that things like tariffs, we've had them in terms of industry-specific tariffs with long investigation periods, but now we've got them, they're being implemented quickly and they've been implemented in a much more broad brush manner, and that's going to impact the consumer. So it's just a different conversation, and that's what we're kind of working through and listening to companies to see how it impacts their bottom line.
Well, and then there's the kind of wider macro picture as well that is a constant conversation we're having here on Bloomberg TV and radio, Katrina, which is how this all filters into monetary policy, if at all, as the signal we're still getting from the Fed is they are in wait-and-see mode. It doesn't seem that they are super eager to see a Fed put come into place here of any kind. Are you anticipating that? Have you changed your expectations? And what if we are to get a signal from the Fed that they're willing to step in here, would that do to risk appetite?
It's very difficult for the Fed to step in because one of the metrics that they're watching is inflation, and they've spent a long period of time getting inflation, which was at very high levels and very far away from target, back down close to 2.6, very close to their target level. And then so that's on the Fed that's kind of looking at, we've got low unemployment numbers, we've got an inflation number that we've kind of got under control, but tariffs potentially are a headwind to that they could cause inflationary pressure. So the market, though, is pricing in 3 Fed cuts. I think we're at less than that. We do think that the Fed is going to be very cautious before they step in. I think you've talked about a Fed put. I think that President Trump is more likely to make commentary that supports the market versus the Fed.
Well, a lot of people thought we found the Trump put last week when he noted what was happening in the bond markets and issued this 90-day delay. In our final minute here, Katrina, though, obviously what happened in the bond market, as well as what we've seen in the weakness of the dollar, has kind of contributed to this, if not narrative, question as to whether we are now reconsidering U.S. exceptionalism from an equity standpoint. Do you think the end of U.S. exceptionalism is upon us?
Absolutely not. I think that the America and our resiliency and our ability to adapt is what makes this country so unique. And I don't think that anything that's happened has actually undermined that. If I take a look at the factors that support entrepreneurialism, and I look at the factors that are encouraging investment back into this country by a number of companies, NVIDIA is just the latest company that's doing that on top of a TSMC. I think that the American story continues to work here.
All right, we will leave it on that note. Katrina Dudley of Franklin Templeton Investments, where she is a global equity portfolio manager, joining us here on Bloomberg TV and radio. Thank you so much. Really appreciate it. And we still have much more ahead here on Balance of Power. Our political panel will be joining me next. Rick Davis and Jeannie Shanzano will be with me as we consider how all of this is playing out politically for President Trump. We've got some interesting new polling from CBS and YouGov around how people feel about tariffs. And also just a red headline crossing the Bloomberg terminal. Harvard rejecting a proposed agreement with the Trump administration. Of course, we've seen a bit of a jockeying between higher ed and this White House. We'll get into that with our political panel as well. Up next, right here on Bloomberg TV and radio.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Live in Washington, where we are focused on basically one thing, and that is President Trump's tariff policy. And that seems to be, if not the singular, the primary focus of financial markets, as well as Amy was just running us through. And it was a big topic of conversation on the Sunday shows this weekend, where you had a number of members of the Trump administration fanning out across the networks to defend and explain President Trump's tariff policies, from the Commerce Secretary Howard Lutnick to Trade Advisor Peter Navarro, Kevin Hassett of the National Economic Council, and USTR Jameson Greer all shared their thoughts this weekend.
The president is on it.
It's very, very important for people to understand, why we're doing what we're doing.
What President Trump is doing in his vision and his leadership is to completely realign the world economy, but in so doing, put America first.
The world cheats us. They've been cheating us for decades.
We have been living under a tariff regime, but it has been the regime of other countries.
But more importantly, they cheat us with the so-called non-tariff barriers. It's the VAT taxes, the dumping, the currency manipulation.
We can't be relying on China for fundamental things that we need.
It's going to be up to these countries to come to the table, continue coming to the table, and make these kinds of offers.
So the administration outlining its vision when it comes to trade. The question is whether it's a vision that the majority of the country and the American electorate actually shares as well. And on that note, some interesting polling came out this weekend from CBS News together with YouGov that focused on tariffs and the economy overall. Here's a few of the highlights for you. On tariffs, largely, 58% said they oppose President Trump's new tariffs on imported goods. Just 42% said they favored them. And 75% said the tariffs will increase prices in the short term. Another 48% said they will increase prices in the long term. Smaller minorities said they would have no impact, or they weren't sure, or that they would decrease prices. Plus, another finding in this survey, nearly 2/3 think the new tariffs will make the economy worse in the short term. All that said, when we consider President Trump's overall approval rating, 47% approve, 53% disapprove. So I want to get into these figures now and how the policy is playing politically, and turn to our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with me here on Bloomberg TV and radio. Rick, of course, is a partner at Stone Court Capital and Republican strategist. Jeannie, a Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, when you look at figures like this, it would suggest that these policies, as much as President Trump believes them and continues to define tariffs, or say tariffs is his favorite word in the dictionary, that it's not necessarily favored by the majority of the country. Does it ultimately, though, make a difference for this White House?
I think only on the margins does it make a difference for this White House. In other words, will they tweak their policies, 90-day delays, things like that, in order to sort of satisfy consumer demand and also the markets? Because, of course, part of what is driving consumers' attitudes is what they see in the market. So the combination platter of, robust economy, strong markets, and consumer support is something they have to be considering on a daily basis. And we've seen them tweak their policies, especially around tariffs in that regard. That being said, these consumers are pretty grumpy. We saw last week the Michigan Consumer Sentiment Index came out, very similar numbers, worst expectations for inflation since 1981. So the book is getting written pretty strongly right now that maybe we can't necessarily depend upon consumers to keep this economy running. They're doing a great job right now, but with their concerns about the future, I would say the Fed is probably more worried about future inflation than it is inflation today.
Well, and I guess it's a question of how far into the future, because when we consider the kind of language in this polling data, Jeannie, again, 75% said the tariffs will increase prices in the short term. Nearly 2/3 think new tariffs will make the economy worse in the short term. And the White House hasn't necessarily pushed back on the idea of there being some detrimental impact in the short term. They keep saying short-term pain for long-term gain. I guess the question is it enough for consumers to tolerate that in the short term if they believe in the long-term game, or do you think that belief still might be missing as they consider what this is actually going to do to their wallets and household balance sheets?
Yeah, consumers are screaming, we don't want pain of any kind, short-term or long-term. And quite frankly, the White House isn't listening. And why the White House isn't listening? Donald Trump doesn't have to run again, but who's going to listen are the Republican members of Congress, because they will hear from their constituents who say, hey, wait a minute, all of these exemptions the president is handing out, my little store in Oklahoma, I'm not on his radar because I didn't give $1 million to his inaugural, so I can't get in his ear to claim an exemption. And that's what I think we have to ask ourselves. Why all these exemptions? Why tariff policies that are so arbitrary? Because Donald Trump wants the power to dole out crony give outs to the people that he feels he are in alignment with him, and he wants to withhold for others. And that's really what this is about. It's not about reshoring, because exemptions work against that. We are not in an emergency that makes us pay more for sneakers than we would for electronics. So people know this. I mean, people go to the store and pay more for eggs as Easter is coming up, and we've all heard. The one answer people answer when you say, why am I paying more? Donald Trump's tariffs. And this will hurt Republicans in the polls. It may not hurt Donald Trump because, quite frankly, he just wants the power. He doesn't have to run again. So he doesn't really care about these polls anymore.
Well, to that point, Rick, Congress is in recess for the next 2 weeks for Easter. A lot of them are back home in their districts. I don't know how many of them are planning to get some FaceTime in face-to-face with constituents in the form of town halls because of concern around blowback around these policies. Just how rough will it be for Republican members, especially in terms of what they're hearing at home?
Well, getting back to these numbers, we haven't seen these kinds of numbers in a long time. It really does show frustration on the part of consumers. Consumers are voters, and angry voters or angry consumers make angry voters. And so if there are some sort of brave enough Republican office holders who are going to willingly participate in public forums like town halls, they can expect blowback. I mean, what we've seen recently in other breaks is people, Republicans, Democrats, Independents, coming to these town halls and really expressing their discontent for what they think is a sort of random policy when it relates to just about everything. Prices, the number of people getting slashed in departments like Social Security, their fears over Medicaid being cut. And these are all things that we are telling them we're going to do. So in that regard, I think that you're sort of making the bed that you now have to lay in.
Well, and so then there's the other side of the partisan equation, Jeannie, which is how Democrats are playing this. You look at the weekend activity of Senator Bernie Sanders and Congresswoman Alexandria Ocasio-Cortez as they continue their swing across the country. Bernie Sanders at Coachella. Producer James wishing we had video of that. I too wish we could share that on Bloomberg TV and on YouTube, but they are drawing massive crowds. Jeannie, is this the messaging that is actually working?
Yeah, they're hoping, and I agree with you and James. I wish we had video of Bernie Sanders in Coachella. It was very hot. I have no idea if he was wearing his mittens or not, but he got quite a crowd. Also in LA with Alexandria Ocasio-Cortez. And the message was all about an administration run amok, picking up innocent young people off the streets and putting them in detention for having a political opinion, destroying the economy, breaking the markets, not wanting to support people who are on Medicaid despite working at McDonald's and other jobs. And so Bernie Sanders has a message. Unfortunately for the Democratic Party, they don't have a leader right now. So he is giving Democrats a way through this, but whether they're listening or not is a big question. And by the way, we had a sort of split screen with Donald Trump at the UFC in Miami as well. So they were all out sort of gearing up the crowds this weekend.
Yeah, I wish we had video of that too. Entering the arena kind of like a fighter, fists in the air, chants of USA. It's just a remarkable moment we're in American politics. Jeannie, knowing you study politics, but you also, of course, are a professor of political science at Iona University, spend a lot of time in higher education. I do want to get your take on the headline that just crossed the Bloomberg terminal. Harvard rejecting a proposed agreement with the Trump administration, which, of course, has threatened to halt $9 billion in funding over demands that include things like governance and leadership reforms, merit-based hiring reform, merit-based admissions reform. Harvard University's lawyers saying they will not accept this deal, unlike Columbia, which acquiesced to a lot of demands of the Trump administration. And I wonder what you make of the news.
Very welcome news. If Harvard cannot stand up, who can amongst the universities in this country? And I give the president and the faculty who filed a lawsuit credit for this. This is an attempt to undermine the freedom to engage in a liberal arts education, free speech. Harvard does have issues. They've acknowledged that. They've been working on issues of anti-Semitism. But the fact that Donald Trump can threaten to take away their ability to control their curriculum and other things unless they abide by his wishes is a bridge way too far, and good for Harvard for stepping up. I think Princeton and others will be inspired by this, and the law and hopefully the big shoe law firms will as well going down the road.
Well, so Rick, I'll give you a chance to swing at this one as well. Is this ultimately a fight that Harvard and these universities can win up against an administration that's threatening to pull funding?
Well, let's just be clear. There is no freedom of speech right to spending taxpayer dollars. And that's what this debate is all about. There is an enormous amount of taxpayer dollars going into these institutions, and it's up to government to decide what uses they are. This is where elections matter, and they have consequences. And the consequences in this election is that Donald Trump wants to turn the clock back to a period of time when people like-minded like Donald Trump get to decide what those taxpayer dollars are going to be used for. So he can threaten, he can cajole, but at the end of the day, his only real leverage is taking away federal funding, and that's a taxpayer issue. So I think that at the end of the day, it puts universities in a very difficult position. They're used to, not being insulated against any kind of political pressure, and in this case, that's not going to work for them.
All right, Rick Davis and Jeannie Shanzano, our political panel, joining us on this Monday here on Balance of Power. Thank you so much. And we still have more coming up as we turn to geopolitics. President Trump talked about both Iran and the Russia-Ukraine war in the Oval earlier, and we'll have the latest there next on Bloomberg TV and radio.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We want to focus on commodities and oil specifically as well, with WTI crude down about 0.8% on the day. We're just shy of $61 a barrel. So off the lows we experienced last week But still, we're talking about some pretty depressed prices here. And in the face of that, some interesting news from OPEC today, which has cut its forecast for oil demand globally, not just for this year, but next year as well, in the face of President Trump's tariffs. The cartel projecting an expansion of 1.3 million barrels a day, or approximately 1% for each year. And we should note that even that reduced forecast is still higher than other forecasts that are out there. So we want to get into this now with Mike McGlone, who covers commodities for us, senior commodity strategist at Bloomberg Intelligence, live in Miami. So, Mike, even with this reduced forecast, do you get the sense that OPEC is still being overly optimistic on demand here?
Yes, I love your question, Kailey, and your lead, and it's perfect. They are just catching up to the rest of the world. They obviously have a bias for crude oil to go up. They're pointing out the facts of what's really happening. Crude oil is going down because it went up a lot to the peak in 2022. And that shifted some of the world order to incentivize much more supply out of the U.S., which is still the case, excesses of supply. And by the way, the cost of production in the U.S. is pushing now towards $50 a barrel. So it's kind of a gravity pull level. We have declining demand out of China. We have a paradigm shift in the world shifting to EV. So this is a perfect storm for normal reversion in crude oil. The last 20 years, the lows have been around $40 a barrel after shooting up above 100. Now it's got a good reason to do that. But the bottom line is, the U.S. stock market has to go up now, and I think crude oil is realizing the stock market is probably going to go down, which means it's a matter of time crude oil gets below that cost of production to shut off those excesses.
Well, so I guess it becomes a question of policy decisions moving forward as well, and at a time when OPEC is adding more supply onto the market, yet cutting its demand forecast, and President Trump is pushing for more supply to come out of the U.S. Are we just going to end up in a world in which we're incredibly oversupplied, or are producers going to recognize that and make decisions accordingly?
Yeah, well, the number one way to really shut off all that excess supply is for prices to go down. And that'll happen below 50, usually happens around 40. It's a matter of time, but I see the average price of gasoline in this country is still above 3. Now, it's driving season. It'll stay high for a little while, but by this time next year, or midterms, drop to 2. It's a normal reversion. Diesel going lower. Energy prices also pressure on inflation, and it's a stated goal of the Trump administration to have lower interest rates. So to me, it's just a matter of time. The whole tilt is going that way. I don't see what stops it, but I'll tell you, prerequisite for just stability, stock market has to stay up. And if it continues downward, which Bloomberg Economics' base views would drop down to 4,000, S&P 500, about another 20% in the case of recession, we're going to get normal deflation from the inflation. That's the trend right now.
Well, and then, of course, there's the unknown factors to consider here, including geopolitical factors. Mike, just quickly, as we heard President Trump today talking about ongoing talks with Iran over its nuclear program, if that somehow results in sanction relief and more Iranian crude coming onto the market at a time when these other dynamics we just discussed are in play, what would the impact of that be?
Perfect storm. The risk is there's some kind of supply shock. Crude oil basically needs a supply shock to go up, like the grains need some kind of drought supply shock to go up. Otherwise, they're heading towards low price cures. So you described the whole trajectory. Now, the thing is, everybody agrees with it. It was a little bit difficult when it was at 100 and it was heading lower. Now that we're heading towards heading at 60 and lower, everybody agrees, which is a bit of a bullish factor. But overall, the trends are very bad for very good for lower energy prices. Let's put it that way. Consumers love it. It's all good for consumers.
All right, Mike McGlone of Bloomberg Intelligence joining us from Miami. Thank you so much. And I want to focus more on the subject of Iran now. Of course, there were talks held on Saturday in Oman between the U.S. and Iran, the highest level diplomatic effort to address its nuclear program we've seen in years. And while not much tangible necessarily was yielded by Steve Witkoff, the Trump administration's Middle East envoy, meeting with the Iranian foreign minister, we did get confirmation that there will be a second meeting that will happen in Italy this coming Saturday. So is that alone enough of a sign of progress? On that, we turn to Michael Allen, who is here with me in our Washington, D.C. studio. He's managing director of Beacon Global Strategies, also former special assistant to President George W. Bush in the national security sector. Good to see you, as always. Thanks for being here on Bloomberg TV and radio. Is the idea that we're having another round of talks in and of itself enough progress to you, or should we have had more come out of this meeting?
I guess it's progress to say that we've talked enough to at least have a second meeting, but at some point we really need to get to the details of what they're discussing. I want to make sure, at least from my vantage point, that Witkoff is very serious about uranium enrichment. He seemed to say the red line was only weaponization, which is the process by which you fashion a bomb out of highly enriched uranium that's called weapons grade. So I want to make sure that we have a lot of technical expertise into what they're talking about, because if we want to be a deal too badly, we're going to get a bad deal.
Well, we heard President Trump in the Oval Office earlier this afternoon saying that Iran has to get rid of the concept of a nuclear weapon. They cannot have a nuclear weapon, but you're suggesting it shouldn't just be about the weapon itself.
Yeah, that's right. I think if they continue to specialize in how to make weapons-grade uranium, that's a skill that you're not going to forget. It's a learned technical skill that will be with them forever. And so we'll always constantly be trying to figure out, are you burrowing into a new mountain like they've done on 2 occasions to build centrifuge halls? And what are you doing on weaponization? That's much harder to track than a huge centrifuge hall. So if any deal results, it has to have any time, any place inspections by the UN's watchdog agency, which is called the IAEA. That's absolutely a fundamental part of any agreement, to be able to check Iran and what they're up to.
Well, so what position is Iran in coming into this then, when we're considering what an agreement could look like, knowing we've had many conversations, with you included, about how it's been weakened by the weakness of its proxies in the face of ongoing fights with Israel or the U.S. striking the Houthis, what have you. Are they weakened enough that they would actually agree to something that arguably you could say Iran might not see as super favorable to its interests?
So I'm worried they're not enough adversely affected quite yet. Remember last time in the first Trump administration, there was a long period of what they call massive sanctions and max pressure. And honestly, I don't know that the Iranians felt it enough, or I think they're willing to really take some serious pain before they're going to deal in a very substantial way on the things that we care about very much. And then, of course, as we've talked about with you before, is the wild card of Israel. Israel may be much less trustworthy of an Iranian deal than Trump might be. And so what do? Do they decide to go ahead and use military action? And I think that's something that's a serious possibility this calendar year.
Well, there's also the question of U.S. military action, too. President Trump was asked by a reporter today about that. He said, if we have to do something harsh, we'll do it. Then when he was asked specifically if that could include a strike on Iranian nuclear facilities, he said, of course it does. Do you see that as actually a likely possible scenario?
I think it's possible. I think his predominant view is what he said in his inaugural, that he wants to have fewer wars, not more, and not getting in another war in the Middle East is one of his chief aims. But at the same time, he has set the theater with B-2 bombers, extra carriers, a lot of military force. I think that's more to reinforce Steve Witkoff's hand as he negotiates diplomatically. But I wouldn't rule it out, because I think if President Trump feels like if he's disrespected or Iran doesn't take this seriously, he might go for it.
I wonder if you feel that the president might be disrespected by what we saw take place in Ukraine over the weekend. Knowing, to your point on him not being a fan of wars, he very much wants to see a negotiated outcome between Russia and Ukraine. He wants the war to end. And yet on Palm Sunday, Russia strikes inside Ukraine, kills more than 30 people, even as there are these efforts towards some kind of peace deal. Does that signal to you that Putin is not taking this seriously? And what does that mean for the president?
I don't think Putin is taking it very, very seriously. I think Putin is behaving like he has the whole time. He did a deliberate attack on a civilian gathering on Palm Sunday. I think this is par for the course for him. I don't want us to bend over backwards trying to get a deal with Putin. I think it's fine that Witkoff is there trying to establish some basic rapport with Vladimir Putin. But at the end of the day, I think the president might be a little bit too saying, oh, it's everyone's fault here. I think he ought to assign more blame to where it properly resides.
Well, on the subject of blame, we heard from him in the Oval Office, and it was an echo of what he had already posted on True Social. The war between Russia and Ukraine is Biden's war, not mine. What do you make of that language? This isn't language we've heard from him before. He's noted frequently that this war did not start under his presidency, which, yes, is true. But to characterize it as Biden's war.
Yeah, I thought he was in a lot of different places in that press conference. He also seemed for a second to say that it was Zelensky's fault that they were even in the war.
Yeah, he suggested Ukraine started a war with a country 20 times its size.
But then he cleared it up by saying, I blame all three of them, and he at least ranked Zelensky in third place on that occasion. But I do think that he's worried about the messages that he sends to Vladimir Putin. He's trying to entice him into a serious negotiation, so that might explain what Trump is up to when he's trying to explain exactly what happened yesterday.
So you think it's more about positioning himself himself for ongoing negotiations. Not that negotiations, which he previously contended would take him a day to sort out, aren't necessarily going his way, and he's trying to cast blame to his predecessor.
I think, on the Biden thing, I definitely think he's trying to say, hey, listen, Biden mismanaged this thing all along. He poured gasoline on a raging fire. At least I'm the one that's trying to make peace here.
Okay, and he's not just trying to make peace, he's also trying to reach an economic deal with Ukraine on minerals still, a draft that obviously has been revised multiple times. Do you think that will be resolved soon? And if it is, what ultimately does that open up?
So I think it helps a little bit because it helps with what Donald Trump is worried about, which is, has the United States been taken advantage of? Have we overpaid for the defense of Ukraine? So I still think it helps Ukraine in the sense that President Trump will be able to say, you know what, we've gotten at least some of our money repaid here. I know Zelensky objects to that because he says that was a grant, and it was. But I think some of this is just the politics of America first here in the United States. And the president, in every relationship from tariffs to Iran, is trying to make sure the United States gets a good deal. So if he feels like we're being repaid a little bit, I'm okay with that.
We heard from President Zelensky. He sat down for an interview with 60 Minutes, which aired last night, in which he invited President Trump, again, to come to Ukraine and see for himself the devastation that has been wrought by this years-long war. Do you think there's any scenario in which President Trump actually makes that trip?
I really don't, unless it was for some crowning achievement at the end of a longer negotiation, and that was part of it all. I don't see it in the cards for right now.
Do you see a deal in the cards for right now, or were we getting overly optimistic with the speed with which this process could actually work?
So I think we're overly optimistic if we think we're going to get all the way to a peace agreement. So there's a spectrum for me. I think it's more likely you get some sort of ceasefire that maybe is occasionally violated and we muddle through for some period of time. I think that's more likely than a full-scale peace agreement, and that might be good enough for Trump in the end, because look how hard it is even to try and get them to live up to the terms of the very modest ceasefire they have today on energy resources and the Black Sea.
But how do we get to any kind of agreement on any peacekeeping force that would maintain a ceasefire, even if it was just a kind of limited, muddled one?
Yeah, I'm worried about that too. I think we've, of course, rejected that Ukraine would be in NATO. It seems like it's increasingly unlikely that we'll have NATO European allies inside of Ukraine. Where I think and I hope we're going to go in terms of security guarantees is some longer-term commitment, maybe not $60 billion a year, but some sort of commitment to Ukraine that will continue to fund your military at some level, at least up until the point where the Europeans can really step up in a larger way. Now, maybe it's hopeful, but I think at some point we have to acknowledge that Ukraine has real security needs, and we ought to try and meet them.
All right, Michael Allen, appreciate it. As
Thank
always,
you.
joining us from Beacon Global Strategies on the latest on geopolitics.
Thanks for listening to the Balance of Power podcast. Make sure to subscribe if you haven't already at Apple, Spotify, or wherever you get your podcasts. And you can find us live every weekday from Washington, D.C. at noontime Eastern at Bloomberg.com.